Okay. Done.
All right, good morning, everyone. Let's get going here. All right, Friday session on the S&P, same sort of thing, sideways move, absolutely no volatility, another record close. Sixth time in a row for 6 consecutive sessions. We've closed at record highs on the S&P and closing higher, obviously. So yeah, it's pretty impressive. The problem is we're going higher over and over and over, but we're really hardly moving to the upside. So it's really, we continue to just see this drift and volatility down to the downside, and it's starting to really feed on itself at the moment. Asia, we had a little bit more going on overnight. We had all the markets up for the first time in a while. We kind of had a bit of consensus out of Asia, with all the markets really tracking higher. We had market Chinese manufacturing index for June that came in at 50.8 versus expectations of 49.7. That was better than expected. We on the back of that, we had the banks and financials that kind of rallied there, and then we also had the mining stocks in Australia, which really rallied hard on the back of slightly higher iron ore prices. We also have copper prices, which are starting to really trade to the upside. And you're really starting to see us heat up a little bit in the commodity space over the last couple sessions. So I think we're going to need to watch those closely today. They've been a big laggard here, and I think if you actually do have a reason for these guys to shift into some mining stocks, you might start to see at least some money moving out of some and back into the others. What I find really interesting here, and maybe part of the reason why we're starting to get a move up in commodity prices, is we're starting to get inflation pushing higher now. You can see here from this chart, inflation expectations are the highest that they've been in the last year. This is the Barclays 7-10-year bond treasury fund ETF that trades there in the States, and you can see that we're definitely pushing up to the higher end of the recent range. And I think that this is important to note, and the fact that Janet Yellen's willing to kind of keep her foot on the gas, or at least talk that she's willing to keep her foot on the gas, is starting to push some guys into some of the commodity spaces here, and thinking that they're going to get some inflation, and she's going to continue to push forward on that. All right, today in corporate action, we had Naspers that came out pre-market. I saw an interesting note on Friday late in the day talking about making a case for some soft numbers out of Naspers, which soft is definitely what we got. Headline earnings per share came in at 21, ran 81 cents. Expectations are for 25.56. Revenue came in light as well at 62.7 billion. Expectations were for 63.3 billion, and then the divvy per share came in 10 cents light as well. So really a bit of a miss across the board. We'll have to see how it plays out today, but you'd expect it to be under a little bit of pressure. Obviously 10 cent up a scrap in Hong Kong, but we'll just watch the market action today and see how this is going to go. But we also have Vodacom and Tiger Brands that are ex-div as of today, so watch those on the open. Don't forget about that and get caught on the wrong side of that one. All right, market data, like we mentioned earlier, we had the Chinese numbers, the Chinese manufacturing numbers, which are better than expected. We also had manufacturing numbers out of Japan, which were better than expected. We've got PMI numbers, manufacturing and service PMI numbers across the European region today, all the way from between 9 and 10 o'clock. So just keep an eye out for those. We had Chicago Fed numbers later in the States, as well as PMI numbers and existing home sales. All right, let's get into the maps. It's a little bit light of a day today for us to look at the charts, simply because there's just so little to really look at. I mean, Friday's moves were benign, to say the least. If we have a look, and one of the things that we can look at here is Steinhoff. Steinhoff made a nice breakout to the upside through this 56 level, which we've been at. We've actually been up here for a hell of a long time, a month and a half, almost 2 months now. And you can see here, we've kind of been in a bit of a ascending triangle, and we finally popped up through 56. Probably good for a few more rand to take us up closer to 60 on the back of that move. Able really dropped on Friday and really completed the target that we had laid out for it. If you look at the height of that channel there, we had laid out a target of it for Able to what do we say, 7 Rand 80, and we closed at 7 Rand, or sorry, 6 Rand 80, and we closed at 6 Rand 72. So to me, we've really reached the target. We did just drop out of another little bear flag, which we had talked about a week ago. They're kind of forming in this bear flag earlier last week. And, the chart's still looking very much bearish here. I know we got a lot of people I keep speaking to that keep trying to sell the good side of the story and how, this thing's got huge upside potential, but, right now the maps don't lie, and they're telling us that this thing's still broken. So just be careful out there if you're playing in this stock. I think that the target is still slightly lower. Oh, sorry, we have reached the target, but there could be a slight bit more downside in this thing. But I think, it's starting to feel like most of it's probably been capitalized on right now. But just be careful out there. This thing's making new lows. I think we need to see a reversal candle. Or something, some sort of change to the technicals here before you really want to have a jump in on the long side of Able. All right, look at Aspen. Aspen's been look at this on the 30-minute. You can see here, it's really just been it's kind of flagging out above 300 here. I wouldn't even call this a flag. It's just pushing out sideways and building a nice little base here, just above the 300 Rand level. And I think that the longer that it can kind of stay in this little channel, the better. The longer we kind of consolidate here, especially because we're consolidating on top of this 300 Rand number. Definitely think that we could push out to the upside again and probably reach what is our higher target. If I'm not mistaken, was up around $330 in the longer term. All right, and now let's look at FirstRand. This doesn't quite look right because we didn't close at 41.40. We closed down here where this little dot is at 40.96 in the auction because we had a big sell-off in the auction there on Friday on the back of some of the reweightings. So we're going to look at this as though that was kind of potentially a failed breakout at the moment, and I think that's key. I think that's going to really further define this level as potentially a top around 41.27, 41.30 in FirstRand, not a top, but a resistance level to have a look at. So we're going to look at 41.29, 41.30, and this thing's going to need to get through on a closing basis to really potentially push through to the upside. Otherwise, we could end up seeing a bit of a correction maybe in FirstRand. All right, and the last one I'm going to show is ShopRite. Oh no, that's SHP London. ShopRite. Okay, and we're going to go back to the full year chart here again. When we talked about the breakdown here from 165, we talked about this at the height of the channel being up here slightly, just above 175, and and the target being maybe a hair below 155. Well, that's exactly where we got to about a week and a half ago, and we made a nice reversal off of that level. We're already back down here testing this level again. I'm just pointing it out simply because I think it's an important technical level. I think it probably also lines up beautifully in the 61% fib retracement numbers. Somewhere around there between 50 and 61, and I think that we could definitely, if we do manage to make a reversal off of 155, this may end up being a nice little level to pick up the stock. It's really lagged its counterparts, and probably will start to make up some ground here in the near term. That's it for today, guys. Thanks a lot.